the usual time for my usual streams, and yeah, this is basically just another day. We'll just do what we have, and we have some trades running. So I just executed them. I'm starting to see profitability, and honestly, it's amazing because I'm slowly starting to have profitable trades over and over again, which is great because I'm unprofitable for a while because when that was when I was starting off, and as usual. Let's get back to learning because I was wasting some time earlier today. I wasn't really grinding all day. I was grinding, but I wasn't really grinding all day. So let's go through my previous notes first. So let's go through the part that I missed today because today I didn't really grind too hard. So yeah, it's okay.
That's the first time. So when we have a fair value,
let's kick back things from where we stopped.
Really take your fair value gaps to the next level. That's going to be the one inducement or overlapping. Why do we need this?
Overlapping is basically multiple confluences.
In the first place, when looking at fair value gaps, it acts as a line of defense, or it acts as a level of support or level of resistance, even though it's not the exact meaning of support.
I think it's talking about the inducement zone is a manipulation sweep. So manipulation, fair value gap manipulation. So it's a sweep inside the fair value gap, and then market make a buy model. So on the lower time frame, right? Because we see a manipulation, and then right after you see the market make model. So you have overlapping defenses like overlapping confluences like balance price ranges, breaker blocks, auto blocks, you name it.
Or how people actually tend to understand it, but it supports price to go higher, or it pushes price lower, for example. When we have multiple lines of defense overlapping or happening at the same time, there's going to be a higher probability. In other words, multiple confluences at the same time. That's how you get high probability conditions. The fourth rule says that we need to have an inducement or an overlapping to...
Yo, what's up, Nitrox? How you doing, man? I don't usually like sleep stream at this time, but today I'm streaming, so I mean I do stream. It's fine. Okay, never mind. There we go.
Make a fair value gap a higher probability. Now, what is inducement? It can be in two different forms. The first one is going to be, let's start with this one. It's a fair value gap that has liquidity above or below. So in a bullish scenario where we have this bullish fair value gap, there is liquidity that is very close to the fair value gap. That is an inducement. IDM. Okay, that's one form of it. Another form is when price comes to and touches the fair value gap partially, started going higher, and then needed to go lower again, taking that inducement now. That's also another type of inducement, which is usually a first mitigation of fair value gap. It's going to be an inducement. That's the first time. So when we have a fair value gap,
so it's basically a fair value gap manipulation. For example, you have overlapping defenses where you have multiple confluences like balance price ranges, which is basically overlapping fair value gaps, and you have breaker blocks. Like basically this is a bullish breaker bearish breaker, and we have a bullish breaker, which is basically no, I'm tweaking. Yeah, this is a bearish breaker because you go lower, but then a bullish breaker would be the exact opposite. You go low, you go higher, you go lower, and then something is not adding up. No, I'm tweaking. Look. Yeah, there we go. So this is a bullish breaker. So, and the bearish breaker would be low, high, low, high. You tap into this and you go lower. So it's simple. It's pretty simple. We have balanced price range, which is basically overlapping fair value gaps. Probably a bearish fair value gap here and a bullish fair value gap on the other side. It's pretty simple. We have an auto block, high probability and low probability auto blocks. It's pretty simple. You can see that this is a manipulation. So this is manipulation. This is manipulation with distribution like right after, which is basically taking price higher after the fair value gap manipulation sweep is completed. Apart from that, we have this, which is also the same thing. We're basically manipulating price in, we're basically manipulating price in the fair value gap. So it's a fair value gap manipulation. So that's what inducement is. So once you identify fair value gaps and a fair value gap manipulation is a inducement zone. High time for fair value gap manipulation though. So the context is what applies the most. So HGF fair value gap manipulation is an inducement zone. So you always need to see the price being swept at a fair value gap. That was something that was missing yesterday. So that's something I didn't really consider today as well. So yeah, yikes. So I just got into these trades like a few minutes back. So yeah, let's go back and let's see what else.
that has all of the previous 3 rules and have the 4th one, either an inducement or overlapping, or sometimes both can be happening at the same time, then that is a high probability one. What is overlapping on the other hand? So fair value gap is what? It's a PD array. When we have more than one PD array that is overlapping also with the fair value gap, that becomes a high probability one. So for example, we have something like this, where we go up, we go lower, and then we break structure. This one, it could
Break a
have
structure.
been a mitigation block, it could have been a breaker block, or sometimes it could
Oh yeah, that's also fair. But that's if you have context from earlier
have been
though.
also an order block. When we have this, that is overlapping also with the fair value gap, automatically it becomes higher probability, because we have fair value gap pushing price higher, as well as the high here pushing price higher. So we have 2 things pushing price higher other than just one thing, and that's automatically a higher probability one. Now we could also have fair value gap plus fair value gap. So 2 fair value gap, and how does that look? So we have a fair value gap here that's bearish, now inversed up, and we have a new creation of a bullish fair value gap. So the fair value gap that was bearish, when inversed, it becomes a bullish fair value gap, and we also have a new creation of a bullish fair value gap. Then we have 2 bullish PD arrays pushing price higher in this case. That's why this becomes also an overlapping, and it is a higher probability one. So focusing on those 2 types and the different forms below each type, that's how you get really high probability fair value gaps. We're gonna go again on the 4 hour. A lot of examples we have here. So because we have just it to you, and we're pushing. That's not gonna work in there. So when you master 1, you become good at 2 and master.
Is it okay over here?
Again on the 4 hour, a lot of examples we have here. So an example of the overlapping, where we have a balance price range, for example, which is 2 fair value gaps overlapping with each other. You see fair value gap here, fair value gap here. Where's the
That's price range exactly.
overlapping? That's the one. That's one type of it. Now another type is having liquidity, or in other words, inducement near the key level. One of the examples is this one. We have this liquidity where we have a fair value gap below that can be used.
Manipulates you're right. Swing low. So you have this swing over here. You have the manipulation over here, fair value gap, manipulation, wick, and then we have the distribution leg right after. See that this is AMD, and we have this distribution towards this swing high. This is basically where TP is, and sorry, and yeah, basically if you were to enter, you'd probably enter somewhere. Even here, if you could enter, you're targeting like somewhere. Trade doesn't really make sense unless you have like. It's like less ratio though, so I would ideally not consider this. But I would consider distribution, so I would look for low time frame opportunities. For example, this, you could inverse this and then go higher from there. Look, inverse fair value gap. So it's pretty simple.
As inducement, making this higher probability one. Now sometimes it can be even closer or inside. For example, this one here. You see, we have this low that is inside of the fair value gap. That's the first mitigation that can be used as an inducement. Now this one has 2 at the same time. Has what? It has inducement and it has an overlapping. Where's the overlapping? If you can see that there was this order block here that was broken above. This is the last bearish candle before the bullish move. That's an order block. Maybe in the low time frame it can be a breaker block or a mitigation block. And then we have a fair value gap here. That's an overlapping. So you see this zone. This is the last bearish candle before the bullish move. That's an order block. Maybe in the low time frame it can be a breaker block or a mitigation block. And then we have a fair value gap here. That's an overlapping. So you see this zone here is very high probability one. Why? Because we have 2 confluences here. Now go into another example. We have, first of all, a balance price range, which is an overlapping of 2 fair value gaps. In this case, it was not respected. But why? Because we have other inducement here. See, this is a high inside of fair value gap taken here. Same thing here. This always makes the fair value gap much higher probability fair value gap. And also the balance price ranges. Now you could have asked, where did price react off here? And why did it react? Because we had price respecting a fair value gap here. Maybe the whole thing here is a daily fair value gap. But the most important one is this zone here. You see, we had a big fair value gap and we have a smaller one inside. This becomes balance price range. You can see that price really respects that one, even does not close inside of it, and then keeps pushing lower. So those are the types of inducement. You can go to the chart, practice it yourself. I do have multiple videos on inducement. You can watch those. But this really takes your fair value gap game to the top, just using those 4 rules that I introduced to you. And that can also become much better looking at the confluence.
So use this price range, sort of taps back into this range, and you can use this as support to go higher towards this. So makes sense, I guess. It really does. But right now I have a problem. Like, just I don't know, life in general, I guess.
It's
weird. It's weird.
Now into the extra confluences section, or the bonus. And what I'm going to do is not go into much details, but go over each one quickly just to give you an idea about it. And if I have a specific video about one of those concepts, then I'm going to guide you to. Then I'm going to leave it in the description, or it's going to be suggested to you. Starting with the first one, which is time. Actually, the time when the fair value gap is created is very crucial. As an example of that is a fair value gap that is created after price taken. So let's say agent session here. Price takes agent session in the lender session and then goes lower, creating a fair value gap. This becomes a high probability one. A fair value gap created in the agent session usually is a low probability.
Yeah, it's basically like where is it?
Most of the time, actually low probability one. Unless we had agent session trending, reaching a 4 hour, if we're looking at the 50 minutes, then reaching a 4 hour fair value gap and then reacting of it. Then, if there's a fair value gap here on the agent session, it can actually hold. As
what?
Price takes agent session in the lender session and then goes lower.
I'm having a migraine for some reason. I don't know why. I think I should stop drinking whatever the fuck this weird liquid was yesterday. And
a fair value gap that is created after price taken. So let's say agent session here. Price takes agent session in the lender session and then goes lower, creating a fair value gap. This becomes a high probability one. A fair value gap created in the Asian session usually is a low probability one. Most of the time, actually, low probability one. Unless we had Asian session trending, reaching a 4-hour, if we're looking at the 15-minute, then reaching a 4-hour fair value gap and the reacting of it. Then, if there is a fair value gap here on the Asian session, it can actually hold. That's the only scenario where Asian session is going to be, having good fair value gaps. For example, we can see here in euro dollar that we had an Asian session here. What happened?
It's basically saying, unless you want to consider that whole aspect, just don't trade Asia and just only stick to New York and AIM's London sessions. So
is liquidity sweep into an order block and then creating this fair value gap. This one held, and why? Because we took Asian session low and then we're pushing higher now. And now this happened also here. You see, this Asian session is somewhere in here. We took the high, we create a fair value gap here, and we reacted off it. Now this happened a lot of the time, but it's not going to be every time because we still need to align the 4-hour. You see here, we created multiple fair value gaps, one here and maybe a few ones above. This one was a high probability one, but price did not retrace back to. And another example is here, fair value gaps on the Asian session are not valid. Maybe keep an eye at the 50% of the Asian session. Maybe there is a fair value gap there. It could hold, but overall, you see liquidity sweep of this level as well as the Asian session high, and then fair value gap here. That's the one that held. And then we also keep an eye at what if we had Asian session like this, and then we had a sweep of the low in London session. We create a fair value gap and we respect it, and then we break structure at New York session. We might look for continuation of the London direction. So it could have been something like this, where we had fair value gap on London here, and it is with the direction of the Judah swing or the liquidity sweep that happened of the Asian session. So sweep going up, I'll break a structure here, I'll break a structure here, then leaving a fair value gap. This fair value gap is also a high probability one based on the timing. In the PM session in the forex market or near the closing of the daily candle, I don't recommend the gap. This of the Judah swing or the liquidity sweep that happened of the Asian session. So sweep going up, I'll break a structure here, I'll break a structure here, then leaving a fair value gap. This fair value gap is also a high probability one based on the timing. In the PM session in the forex market or near the closing of the daily candle, I don't recommend.
he wants basically what he's saying is he wants Asia to consolidate, and then he wants a manipulation right after, and then the distribution leg which pulls back towards a fair value gap which is formed in the leg after the bearish structure, which is it's a high probability trade during London session, because if Asia manipulates this low and it's considered this whole thing as Asia, then London will in fact use this fair value gap. This is a manipulation below these equal lows, so there's a lot of restrained liquidity right below this. Right after that, you can see that this price is pushing higher, and it's probably using fair value gap, which is kind of weak because it's doing Asia, and then we have a upward move with a breaker structure. So if I say BO, I bet BOS, you can see that this is the breaker structure, and then we have the breaker structure. It sweeps this liquidity right after, and then it retraces back to the fair value gap where it's a high probability trade towards the upside. Now this is what we consider a good trade. Okay, so it's one of those trades where everything is sort of lining up, right? So you always got to consider what the volatility is. Like, for example, what is Asia session doing and what is London session doing, right? So for example, like over here, right, this is what, Euro USD. I didn't take any trades here. Okay, so let's see what this is. The one starting to feel a bit of fatigue, like bit fatigue. I've been streaming for 30 minutes. Why am I streaking? So I bought here, targeting this because it's gonna fill this supply level at least to, like, at least to here. And yeah, that's the buy order, but the sell order, I'm not too confident in the sell order because this sell order had a bit of a problem. So even though this is technically like a break in the structure, I'm expecting price to have this manipulation and then like pull higher, but legend says on this was gold, it was silver, my bad. So you can see that, okay, market's open here. So you can see that this has a fair value gap at the very lows. So taking it from here is a pretty risky trade, but I'm gonna take it. Yeah, I think I'm gonna take it towards like the low. Oh, now I'm gonna just TP here. I'll say session is closed. Okay, so silver is closed right now. So I think they're preparing for like AM session. Wait, today's like a Thursday. Okay, I gotta really get my profits up. Gotta get my money up, not my funny up. But you can see that this is a good buy. For example, we have this supply level, just retesting this supply level, right? So I'm expecting price to retest, and then you can see that this is a buy from here, so it's using this as support, and then we go higher towards the draw on liquidity. Why? Because we have confluences with the high time frame alignment. Oops, sorry. You can see that this is a order block. So let me just not consider this actually. So you can see that this is a order block which is being retested over here. We have this bearish candles. Let me just expand out. So the only bearish candle that I'm really seeing here, except for maybe this area on the 4 hour. So you can see that this didn't hold because it was wick right through. It went slightly higher. We had a manipulation. Drop right after. Okay, so overall we have a bullish bias because there's no other lows, right? We have a bullish bias on the 4 hour, so I'm expecting price to eventually even go towards this, because this is a 4.45 trade. Sorry. So you can see that if I go to 15-minute time frame, there is a fair value gap in between, so that's basically where I entered from, and we're basically taking towards this 4 hour fair value gap, which is basically rebalancing this price range over here, if you think about it. So yeah, I'm expecting price to be rebalanced over here, so you can see that this is the huge fall that we have. So I'm expecting price to take, where is it? So let's take it slow. Yes, sir. Sorry. Yeah, so I'm expecting price to take it up to this level confidently. So yeah, so that's basically where we are. So it's like slightly above, but who cares? I'll just TP here. But yeah, it's a good 1 to 4 on the dot. So yeah, that's pretty much where I'm gonna be TPing. So right now session's closed, of course. So it's like I just got into it. I mean, this is a trade that I gotta hold for like another 12 hours ish. So yeah, I'm gonna be like going to sleep and just waiting for the TP to be hit, because I'm very confident in this trade because see you putting in the work every day. Keep doing. Thanks, man. Thank you. I appreciate it. Every single day I'm like grinding, trying to become decent, So I appreciate you tuning in though. Just just grinding. It's late night, just a late night stream. So
trading at that time.
So I want to actually hold up. I need to wait. Sessions. There we go. There we go. So now I have a nice chart, and you can see that this is Asia's about to start at 4:30 my time, and you can see that this is London took out the highs, so obviously it swept the highs, as you can see. We have it swept the highs and then it went all the way towards the lows. So it took out, it didn't really take out Asia's lows. But I'm not really expecting price to take out Asia's lows before balance in this price range. My only fear is the fact that this fair value gap might disregard the trade, right? That's my only fear. But either way, we have a high time frame bias, so who cares? Let me just hold this all the way over here, because we have a high time frame bias. Obviously we're bullish until this point, so we have a market maker model over here. We have a good discount entry because we got in during the 29 point where is it? It's like a good point, less than 0.25, so it's a pretty good entry. I get a good 1 to 4. So we'll obviously keep an eye on the it's actually the other way around, from the swing low to the swing high, because I'm taking this long. There we go. So as you can see that we have this so we see this retest at 0.5, so we see this retest once again, then we're going to go higher from there. So you can see that this fair value gap has been wicked into. I'm expecting a bit of a pullback after this point. It's been retested as well, then keep going, and then we will eventually hit the TP zone. But I'm expecting this to be very consolidated, like a very slow trade though. USD JPY, oops, sorry. You can see that this is a so this was like a fair value gap, so I'm expecting price to rebalance this. That's why I put this here, and let's wick down all the way. So I'm expecting price to rebalance this and then go higher back to the draw on liquidity. So that's where I'm expecting to because this is an order block, so I'm expecting price to rebalance this area anyway, and then take it from this fair value gap all the way back towards this. Okay, so maybe a little higher. So as long as I get like a 1 to 4, I'll be fine. Or like a 1 to 3 point, almost a 4, so somewhere around. See, somewhere around there. It's all good. So USD JPY, we see a bit of a, because we have this 4 hour fair value gap up here, right? So I'm expecting price to take this low, which is also a 4 hour fair value gap. If you go to, so as you can see, this is a 4 hour fair value gap on this. So I'm expecting price to, why can I not? Oh, it's over here. So you see this for fair value gap. So I'm expecting price to sort of tap and then go higher. Yeah, so let's see how price, am I shorting this? No, I'm not shorting this. I'm not shorting this, but I've just like put the thing just to see if my anticipation is correct. But it's not a trade that I'm taking though. Like this is like this price action, I don't really like it, even though it's right above this fair value gap, the stop loss. So yeah, it's basically gonna short all the way. Maybe I would take it upwards though, like after it sweeps the fair value gap, the 4 hour fair value gap. I would expect to take price higher towards the old fair value gap, for example, like somewhere here. I'm expecting price to sweep the lows through the fair value gap, 4 hour fair value gap, and then rebalance that and then go all the way towards here. But I wouldn't take this like up to here. I would take it up to probably this swing high, because it's already like a good 1 to 4. As long as I have a 1 to 4, I'll be fine. Yep, somewhere around there. As long as I have this, I'll be fine. Okay, so I'm expecting a price sweep within this 4 hour fair value gap, and then price goes higher towards this swing, this one, because I'm expecting a sharp turn over here. So I'm expecting an order block here, like right after, if there's like a fair value gap, there'll be like an order block. So I'm expecting price rebalance over there as well. But yeah, so these lows have been swept, so I'm expecting this to retest and then go absolutely lower. After this retest, goes absolutely lower towards this. That's what I'm expecting price to do. Anyways, okay, so let me see. So we have this supply level, right? Sorry, demand level, and demand level order block. It's been retested already, so it's mitigated. So it's 4 hour fair value gap. Let's see how price retests this level. I'm expecting price to maybe draw down towards this range and then go higher, because this is the 4 hour fair value gap on top. Is this a 4 hour fair value gap, or is this something else? Yeah, it is a 4 hour fair value gap. So I'm expecting price to rebalance and then go higher back towards the. Honestly, this is taken away now. So yeah, I wouldn't take this fair value gap anymore. I would, however, take. Okay, never mind. This was already mitigated as well. Let me get rid of whatever this is. So you can see that this has been mitigated. It's already been rigged into. This has been swept. So I'm expecting price to go all the way lower, right? Drop to this, sweep, and then go higher. I'm expecting price to take this lower for now. So it already went to the draw. So yeah, so if it does rebalance price, then it needs to sort of fluctuate and then rebalance this fair value gap. So it needs to sort of pull back up here, because it needs to rebalance all these ranges, right, before it really shoots down towards this. So I'm expecting a price rebalance, and then yeah, I want to see the price being rebalanced over here, and then take it all the way towards the 4 hour draw, which is over here. So ideally, I want to see a retest. So you see price is retested this level, and I'm expecting a price retest once again all the way towards TP. It's pretty simple. It's pretty easy. It's not that complicated. As long as we have the chart like simple, I think we're good. Okay, that's too much analysis.
Especially fair value gaps, they don't become high probability ones. That's how time is very crucial when trading fair value gaps. The second confluence we have today is the market structure. So let's say we hour, if we're looking at the just to you, starting with the first one, which is time. Actually, the time when the fair value gap is created is very crucial. As an example of that is a fair value gap that is created after price taken. So let's say agent session here, price takes agent session in the lender session and then goes lower, creating a fair value gap. This becomes a high probability one. A fair value gap created in the agent session usually is a low probability one. Most of the time, actually, low probability one, unless we had agent session trending, reaching a 4 hour, if we're looking at the 15 minute, then reaching a 4 hour fair value gap and then reacting of it. Then, if there is a fair value gap here on the agent session, it can actually hold. That's the only scenario where agent session is going to be, having good fair value gaps. For example, we can see here in your dollar that we had an agent session here. What happened is liquidity sweep into an order block and then creating this fair value gap. This one held and
order block over here, boom, uses this order block as support, retests this, and then goes higher. Manipulation through this swing low, and goes higher. Now in this scenario, I would be extremely bullish, because this is one of those situations where price really does need to rebalance, because this is a new low. This is a new low ever since this, because it swept this, so it's extremely low. So yeah, let me look at Forex CHF. Let's see. So it's all good. It's gonna go here and then reverse, because it's rebalances this this price range and then go higher. That's what I'm expecting prices. It's all good though. It's all good. At one session, let me see. Spanish what? Oh, it's at 12:30. 12:30 is like 10 hours from now. So we have a GDP, my bad. Employment claims at 6:15 between then, before AM session. So yeah, we should be fine for AM session.
Why? Because we took agent session low and then we're pushing higher now. And now this happened also here. You see, this agent session is somewhere in here. We took the high, we create a fair value gap here, and we reacted off it. Now this happened a lot of the time, but it's not going to be agent session somewhere in here. We took the high, we create a fair value gap here, and we reacted off it. Now this happened a lot of the time, but it's not going to be every time, because we still need to align the 4 hour. You see here, we created multiple fair value gaps, one here and maybe a few ones above. This one was a high probability one, but price did not retrace back to. And another example is here. Fair value gaps on the agent session are not valid. Maybe keep an eye at the 50% of the agent session. Maybe there is a fair value gap there. It could hold, but overall, you see liquidity sweep of this level as well as the agent session high, and then fair value gap here. That's the one that held. And then we also keep an eye at what? If we had agent session like this, and then we had a sweep of the low in lender session, we create a fair value gap and we respect it, and then we break structure. At New York session, we might look for continuation of the London direction. So it could have been something like this, where we had fair value gap on London here, and it is with the direction of the Judah swing or the liquidity sweep that happened of the agent session. So sweep going up, I'll break a structure here, I'll break a structure here, then leaving a fair value gap. This fair value gap is also a high probability one based on the timing. In the PM session in the Forex market or near the closing of the daily candle, I don't recommend value gap. This fair value gap is also or the liquidity that happened of the London direction. Lender session, we create a fair value. That's the one that held. And then we also keep an eye at what? If we had agent session like this, and then we had a sweep of the low in lender session, we create a fair value gap and we respect it. And then we break structure at New York session like this, and then we had a sweep of the low in lender session, we create a fair value gap and we respect it, and then we break structure at New York session, we might look for continuation of the London direction. So it could have been something like this, where we had fair value gap on London here, and it is with the direction of the Judah swing or the liquidity that happened of the agent session. So sweep going up, I'll break a structure here, I'll break a structure here, then leaving a fair value gap. This fair value gap is also a high probability one based on the timing. In the PM session in the
the fair value gap, right? The Fiji to distribute. Here is a bro still awake. What's up, man? Kingpin, I've seen your thing before. Why do I don't know where, but I saw your thing from like somewhere. Is that Kingpin? I'm not too sure. I have no idea, but fair value gap taken distribute higher is during the AM session. I'm on my last, like, I'm on the verge of like falling asleep though. So
Forex market or near the closing of the daily candle, I don't recommend trading at that time, especially fair value gaps, they don't become high probability ones. That's how time is very crucial when trading fair value gaps. The second confluence we have today is the market structure. So let's say we've been having a lot of breaker structure. The recent breaker structure is to the upside. Most likely, I want to see a bullish fair value gap holding other than bearish fair value gap and enter of it. So I want to really look for price tracing
Trace to somewhere around here, balance this price range, and then
to this range other than creating a new fair value gap and entering short. Why? Because the recent breaker structure is here, that is bullish, and I want to continue bullish.
so basically you view the market as cycles rather than on the 15 minutes specifically, you view it as cycles rather than, we have this, how do I explain it? We have this cycle going lower, and then you have this pullback to, take these highs, and then lower. I wouldn't consider it, I don't really want to look at the chart like this, because sometimes when you look at this, like in terms of like how the market's flowing, this causes so much confusion to the point this is it turns into one of those support and resistance type. My work's done and I'm alright, see you, man. Oh wait, this is Navisha, right? If you're playing Wukong, the only person that I know plays Wukong is Navisha. I don't think anyone else playing Wukong. I don't know anyone else who's like playing Wukong though. Oh wait, Ramesh is playing Wukong, but I think this is Navisha. Yeah, because that's the only person that I really saw playing Wukong.
Price retracing to this range.
Have fun, man. See you, man. Bye bye. Good night. It's like good morning at this point. It's like almost 3 a.m. Ghost hour.
Other than creating a new fair value gap.
I'm gonna trade towards a ghost. Yes, sir. I'm gonna trade for a ghost, and then pay the ghost. The ghost is like my assistant at that point. But what's going on here? Oh wait, this is going low. Yes, bro, excuse me. What's good, man? It's been a while, bro. I haven't met you in like uni since like what, 2 years back. That's crazy. Like the last time I met you, I think it was like 2022, somewhere during like between first and second year, somewhere there. 2023, early 2023. So I'm expecting to take this price. Like obviously it will retrace. Like I know this price is gonna go higher. This is like a fake out that they're trying to like make. I know this market, man. I know this market at the back of my head at this point. It's like it tries to fool you. We have works in Ghost Hours. You have works. Oh, you work. Yeah, right.
Short. Why?
Because you guys like work until pretty late. I didn't get an internship, so I think I'm fine for that.
That is bullish.
So
continue
maybe eventually.
bullish. So
as of right now, this is mainly my hustle. So
for example, we can see that we clearly have an uptrend. The structure is trading at that time, especially fair value gaps. They don't
New York game session, exactly. So
high probability ones. That's how time is.
It swept this liquidity and then comes down towards this high probability fair value gap. So it holds ideally to go higher because you have a higher time frame context, which is basically holding as well. So you go lower. So as you can see, it's going bullish. But they have shit. What? Huh? But they have cheated on me. What? Cheated on me about what? What do you mean? What was the concept of IIT for those who skip internships? You can just skip it. Like you can skip it and you can just like continue. No, it's not a problem. That was like a confusion. You can actually skip it. You can skip it and you can do it in 2024.
Very crucial when trading.
It's not a problem.
Fair value gaps. The second confluence we have today is the market structure. So let's say we've been having a lot of breaker structure. The recent breaker structure is to the upside. Most likely, I want to see a bullish fair value gap holding other than bearish fair value gap and enter of it. So I want to really.
So a bunch of breaker structures, and then we have fair value gap taps and goes higher. If we have a context, of course, if we have like a support level, high time for fair value gap from here, we go higher.
Look for price retracing to this range other than creating a new fair value gap and entering short. Why? Because the recent breaker structure is here, that is bullish, and I want to continue bullish. So,
Order flow. Yeah.
For example, we can see that we clearly have an uptrend. The structure is bullish. Breaker structure, fair value gap.
But this is more of like, I don't like of course you can look at the market like this because a lot of people, what they do is, this is like the thing, some people charge people money for this bullshit concept. Resistance and support, or support and resistance. The moment you see a breakout, you trade lower. The next thing you know, you just get quickly liquidated. So it's like a lot of people lose money because they're told to trade like this. Breakout lines, support and resistance. The moment it breaks out, boom, go short. Next thing you know, market goes in the opposite direction. It's basically like, it's kind of sad because people lose money because of that specific concept. And it's like, it was the thing I was doing for my like, first whole month of my trading career. I was just like following this like a parrot because it doesn't make sense. It just doesn't make sense. It is what it is though. We learned. So That's what matters, because if I was stuck in just trading support and resistance, I think I would have been like losing so much more money. So now I'm okay. So prop firms, let's go.
that breaker structure, it just makes our fair value gap much higher probability. Anytime
So
we
we're
have something
much.
like
Oh, I mean,
the second confluence we have today is the market structure. So let's say we've been having a lot of breaker structure. The recent breaker structure is to the upside. Most likely, I want to see a bullish fair value gap holding other than bearish fair value gap and enter of it. So I want to really look for price retracing to this range.
well, it is what it is. Yeah, exactly. It's just like you gotta just adapt to whatever that comes your way, man. That's life. You gotta just smile and take whatever that comes your way, even if it's like a pile of shit. You just gotta take it to your face. It's just like be like, it is what it is. You just move on to the next thing in your life. Because if you're sort of bought down, or like if you go down in mentality because something is not going the way that you wanted it to, it's not gonna that's gonna be the end of it, right? Could either view it as a roadblock, or you could just jump over it.
Then creating a new fair value gap and entering short. Why? Because the recent breaker structure is here, that is bullish, and I want to continue.
Yep, there we go. Breaker structure, fair value gap, boom, goes higher. Break
Bullish.
structure once again.
So for example, we can see that we clearly have an uptrend. The structure is bullish. Breaker structure, fair value gap. When we
Taps, goes higher. Swap this liquidity, taps. Swap this liquidity, balances order block. This is like textbook at this point. Look, we have this order block which has been swept over here, and you tap back, manipulation, distribution right after. You have this manipulation, distribution. Sorry, not distribution. Manipulation, distribution. Yeah, we are continuously exactly. Yep, that's right. Right here we have this tap. We have this manipulation, but it doesn't really distribute much lower because it needs to rebalance its price range. This is where your stop loss is. You enter from this fair value gap, and then you tap to go higher towards a buy-side liquidity draw. Of course, context applied, because at this point you would have taken this buy-side liquidity draw. So if you entry it somewhere, like let's say you wouldn't entry at this choppy range. This is way too choppy. Look at this like choppy range. This is not clean price action. I wouldn't entry from this. But you can see that this breaker structure, it rebalances this fair value gap. This is the order flow which is being swept over here. Order block which has been swept over here. So yes, we see this manipulation, distribution right after. Okay, this is getting messy. See this manipulate. Sorry, this manipulation, it rebalances this order block, and then it uses it. Basically, this is a demand level, and then we have the distribution like right after towards these buy side liquidity draw, but it's way much higher. So at this liquidity, tap back, and then rebalances price and goes higher. So it's pretty easy. Once you see this happening over and over again, it rebalances price, takes this and rebalances price, and then, it takes this high, rebalances price, and then goes higher. Then see you, boss. Thank you, man. Had a great time. Good night, boss. That was like literally like 5 minutes. So see you, man. Thanks for coming by. I appreciate it. Good night, man. It's like 3 in the morning. I gotta stop staying up this late. It's bad.
When we have that breaker structure, it just makes our fair value gap much higher probability. Anytime we have something like this, where we had price going up, coming lower, and then we had a breaker structure, either that's overlapping or not overlapping, but any fair value gap here becomes higher probability one, because the recent structure.
This is breaker structure, and we see this low time frame manipulation and distribution right after. Whole concept of AMD. You have the fair value gap on the 15-minute, or maybe even like a high time frame fair value gap. Use it as support. See the 15-minute manipulation, and we have a distribution right after, which is basically a market maker, sell side of the curve, buy side of the curve, market maker, buy model.
Structure is bullish. Same thing here. You see, we had this breaker structure.
I gotta stop repeating all this. It's in my head, so I gotta stop repeating things over and over. So
Here, fair value gap here, kind of
so much studying that I can do. So.
holding, but then breaker structure here,
It sounds super corny though.
fair value gap definitely holding.
Like when I'm saying like so much studying that I'm holding, that is not what I meant. So we balance price, we swap these lows, and we balance price conveniently because this is a higher time frame fair value gap. That's what we're holding here. So as long as, let me just look at USD CHF, which is basically Swiss franc. If I go to forward, you can see that these lows have been swept. You can see that these lows have been swept, and we see a manipulation. So we basically manipulated right here, right below this line. As you can see, we manipulated the lows over here, and basically right after we see the distribution, and we're rebalancing this fair value gap to go higher. So yeah, basically you can see that this fair value gap has been rebalanced, and this is what it's testing, and then we would go higher. So I have confidence in this trade, and I know that we will hit this 4-hour fair value gap as my target profit. Easy. Okay, So I wouldn't hesitate to take this trade. So the other position that I'm holding is in fact the silver trade. So let me just, if I drag this out a little more. Okay, whatever. CGUSD. Let's see what this is going. Man. Okay, so we see this for fair value gap. It's an inverse fair value gap, so we tap back into it. So there's a likelihood that we will return to it and then go lower. So on the 4 hour, we have this low being swept, right? We have this bearish bias, but we will eventually expect to take price towards it. So as of right now, we're seeing that this is, how do I explain this? So we have this high, and we see this is wicked into it. So it's basically like entering from here is, did I really enter from here? This entry is not something that I'm very proud of, to be honest. Dude, did I really entry like that? Come on, dude. I did. Kind of weird trade is this, but I mean, we do have a bias though overall because we're going bearish and then we're going to sweep this 4 hour fair value gap. So yes, obviously we'll have this bias going, but I wouldn't want to drag it all the way to 7.
Holding, and then break a structure here. Same thing here, you see, we had this break a structure here, fair value gap here, kind of holding, but then break a structure here, fair value gap, definitely holding, and then break a structure here, and it goes the same way. You see, break a structure here, fair value gap holding, until we switch the direction. So for example, here we had a minor break a structure to the lower side, and this fair value gap also held a little bit, not that much, but then the main or the major structure is the bullish one. So one break a structure can really make a big difference for fair value gap here. When we are against the market structure, it becomes much lower probability. The third confluence we have is the volume. Now, how do we combine volume and fair value gaps at the same time? What I do actually is using this indicator, which is SVP. You can find this on TradingView.
Session volume profile.
Volume profile, those are the settings that I have. I'll be only using the POC. And this level here on the price action actually shows you where most of the volume was for that session. So I can see that for this day, most of the volume was at this level. So starting.
No, not session, swing volume profiles. I need the one that he's using.
This day, this is where I actually show you can find this on trade, combine volume and fair value gaps at the same time. What I do actually is using this indicator, which is SVP.
It's not this. I don't think it's this. It has point of control, but still, like. See, this one has like way less. It's like a nerfed version of this Lux Algo thingy. I don't need all this other crap though. There we go. Yep, there we go. So we're gonna use this as a support level. I mean, resistance level.
You can find this on TradingView, session volume profile. Those are the settings that I have. I'll be only using the POC. And this level here on the price action actually shows you where most of the volume was for that session. So I can see that for this day, most of the volume was at this level. So starting this day, this is where I'm going to keep an eye at. This is the 1 hour time frame. Now, what I'll do is if I have this level here, for example, this is where the most volume was for this day. And then the next day, when it starts, if I come to a fair value gap that is close to this level, so you can see that we have a fair value gap here that is kind of near and close to where the most volume was, and all of the rules apply to this fair value gap, it becomes a high probability one. Now we can see that we have this zone. This is where the most volume was. This is the POC, and we have a fair value gap that is kind of close to it. If it is really like aligning with it, it's going to be better. But it tells me that a lot of volume was around this level. There was actually a lot of volume, and it shows you here also in the volume profile. So you can use this, or just simplify it with this line, and that's where a lot of volume was. This is the POC, and we have a fair value gap that is kind of close to it. If it is really like aligning with it, it's going to be better. But it tells me that a lot of volume was around this level. There was actually a lot of volume, and it shows you here also in the volume profile. So you can use this, or just simplify it with this line, and that's where price react off because that's where most of the volume was for that day. And Same thing here. See, sometimes even price respect this level, like exactly there, for example, here. But sometimes there's no fair value gap. So you see, exactly respecting that level and pushing higher. So for example, here, we have the POC level and we have fair value gap here. Price respect that fair value gap. So if we have POC kind of aligning and close to a fair value gap, that becomes a high probability fair value gap, just like this. And we can use the volume, also the volume profile, to look at the zones of, high volume. So if the fair value gap is, around this high volume level, also we can consider it. Now into the fourth.
Highest volume level, right? I don't really want to consider too many things, so this is nice the way it is. I would consider this as my resistance, so that's enough,
Compliments, and this is going to be
because if I consider too many things on my chart, I think that's gonna fuck it up as well. So.
quality of the range, or in other words, the market maker's model range. That means I'm not just looking for any random fair value gap anywhere in the price action. I'm mostly looking for what? A clear high or low, because we know that price actually trade from internal to external or external to internal. That means fair value gap to a high, fair value gap to a low, and low to a fair value gap or high to a fair value gap. So when we see price going up and then come into a fair value gap, I see that, okay, we have a fair value gap here that is bullish. When we have a clear high, use as a target and use as high probability liquidity level, this fair value gap becomes high probability one, because we are in a context of a market maker's model. We know that we are pushing to this. That's the fair value gap that's going to be pushing the price higher, other than just going something like this where it's really random, and sometimes we can have something like this where price is going up, coming lower just like this, and then creating a fair value gap maybe here, and we don't have a clear context. Sometimes even a price comes here, this context here is not enough for you. It's not even maybe a one-to-one reward to this. So we don't have, sometimes we are pushing to this. That's the fair value gap that's going to be pushing the price higher.
Maybe even like a high time frame, which is a bit of a stretch.
Other than just going something like this where it's really random, and sometimes we can have something like this where price is going up, coming lower just like this, and then creating a fair value gap maybe here, and we don't have a clear context.
My sessions are like, it's out of market time, so the price the market volatility is like pretty fucking low, because like the market volatility is like not gonna be there until like 5 a.m. my time, and then afterwards we will have market volatility. Asia is like shit. Asia session is like the shittiest market volatility. Oh, cute cat. I'm sorry, broski. Maybe this is such clever marketing, because this fucking cat, man, it's adorable. So I want to like fucking donate, right? But I don't got money. But it's like such a clever marketing tactic, though. Poor cat. This is 12:30. I don't know if it's just an animation, but like, man.
Sometimes even a price comes here, this context here is not in. I see that, okay, we have a fair value gap here that is bullish. When we have a clear high, use as a target and use as high probability liquidity level, this fair value gap becomes high probability one, because we are in a context of a market maker's model. We know that we are pushing to this. That's the fair value gap that's going to be pushing the price higher, other than just going something like this where it's really random, and sometimes we can have something like this where price is going up, coming lower just like this, and then creating a fair value gap maybe here, and we don't have a clear context. Sometimes even a price comes here, this context here is not enough for you. It's not even maybe a one-to-one reward to this. So we always need to be aligned with high probability ranges where we have a clear fair value gap and a clear high or low as a liquidity level. How does that look in the chart? That looks like this. We're coming to that fair value gap. Where is the nearest low to that fair value gap? It's this one. That's how we move from internal to external. Now same thing also here, fair value gap. Now we ask ourselves, when price comes to this fair value gap, do we have a clear high to target? Yes, we have this one. That's going to be what? The move of internal to external. That's the thing. Now same thing here. We have this fair value gap. Price comes here, external is here. That's where we target. That's how the market moves. Even if I go to monthly time frame or weekly time frame, that's going to be the way. If you see here, we had a fair value gap.
It's a range to external range.
And
Yeah.
we always ask that question. Do we have a clear range here? Yes, we have a high. We have
High time frame just gives you context as to where price is moving, but it doesn't mean like it will eventually move there. But that doesn't mean that's the only thing that you should consider. So it's gonna be moving from one place to another, but a lot of moving parts involved, so you gotta look at swings, where price is manipulated. If you be inducement, if you entry, will you be inducement? Oh my god, what's that? But
have fair value gap, and now it looks like we're taking the high again, and that's what happened here. So when we have a clear range like this, it's going to help us a lot to know what to target. Again, same thing here. Fair value gap, even though it's a small one, but then targeting the high that was created before price reaching that fair value gap. The fifth confluence that we have is the second fair value gap. What does that mean? That means if I'm having a fair value gap here that is bearish, for example, and I can see prices come into this bearish fair value gap, and then it creates another fair value gap that is also bearish. We have a clear order flow here that is to the lower side. That means I can actually trust this fair value gap that is created.
conflicting FUG. Simple.
By following this order flow here. So price will come to this fair value gap and push lower. Now we could have two variations of this. We could have a one time frame, which means that this is a 4-hour fair value gap creation of a 4-hour, or this is a 4-hour and creation of a 15-minute. Both of those work, depends on what you really want to get out of it. I mean, if you're looking for bias or another fair value gap to enter, often that's going to be the 4-hour, 4-hour. If you're looking for an entry, then it's going to be the 4-hour, 15-minute. It depends on what you're looking for. So if we look at this here, we can see that price is respecting a fair value gap here, and then creating an order flow to the upside, creating another fair value gap. So this fair value gap is created by respecting another one. That's going to be a high probability one. Also look at the second fair value gap in the 15-minute. I mean, let's switch to 15-minute in this case and see, do we have fair value gap respecting, creating another fair value gap? Actually, if you can see, we have fair value gap respected, creating another fair value gap, and this one was also respected. Another example, you can see to the downside, for example, this one here, we can see fair value gap respected, creating another fair value gap, and also this one respected, even though it went above it a little bit, but it's still respected. Now this one, fair value gap respected, creating another fair value gap, respected again. You see how we have more opportunities on the 15-minute? So this can be actually a model by itself, the second fair value gap entry. The last confluence that we have, and that's the sixth one, the third candle. Actually, I do have a full video about this if you wanted more information.
Basically combining order flow with a high time frame context, basically.
Of the second fair
I'm creating order flow in respect to high time frame context, so that's what it does.
value gap entry. The last confluence that we have, and that's the sixth one, the third opportunities on the 15-minute. So this can be actually a model by itself, the second fair value gap entry. The last confluence that we have, and that's the sixth one, the third candle. Actually, I do have a full video about this if you wanted more information. So we're going to be avoiding the fair value gap that has a third candle that is opposite to the direction. What does that mean? Let's say we have a bullish fair value gap just like this. Now, what if the third candle was actually going lower, just like this, and creating a very small fair value gap? Let's assume that this is a bearish candle. To see how it
Low probability.
looks, it looks like this one was really ready to go lower, even though it has a high probability to fill the fair value gap, but it does not have a high probability to respect the fair value gap. We're not really interested in. Now, how does it look on the chart? Let me show you how. So what you're seeing here is this fair value
Low probability. Even though it went higher,
gap here. Even though
it's
it's
pretty low
work,
probability.
but you see a lot of wicks here, and we're not going to be trading this one, even though it kind of held. But the reason is, you see, bearish fair value gap going higher, creating a fair value gap here. But this third candle was really ready to go lower. So you see how it really closed even with no wick to the lower side. It means that it's really willing to go lower. So that's the reason why we don't
No buying pressure. No wick from the bottom. No buying pressure. No wick from the top. No selling pressure.
trust this type of fair value gap when we
The bearish candle opens here, closes here, and plus, even though we technically went higher, this is a type of situation that I would avoid.
have
Got
the
it.
candle going lower
Thanks,
like this,
boss.
because it's really ready to just go and take the low again and then create another fair value gap. This here, if it was a fair value gap, I would not take it. What I want to see is a fair value gap that has kind of a consolidation at the third candle, and not really that expansion candle, that big one.
Then we can see price making the low here and then it shoot to the upside. Then the market complete in the lower time frame for entry. This high time frame would only be used for analysis, and then in the lower time frame we're going to use liquidity with proper analysis, including maybe fair value.
Lower time frame, 15-minute fair value gap manipulation. So the high time frame fair value gap will be having high time frame fair value gap manipulation will be very visible on the low time frame. So low time frame will have a Markov make a buy model, ideally if you're using a fair value gap as so what level. Simple.
Gap or imbalance.
But in the liquidity leg to be what?
Hello traders, in this video I'm going to show you how to use liquidity sweep candlestick using time frame so that you can trade the higher time frame using the lower time frame as your entry point. We will also provide you with some examples when we move forward with this video. I'll try all my best not to gatekeep any information. So let's begin with the video. In this video, you're going to find liquidity leg to be swept using the high or the low in the higher time frame. And then also in the higher time frame, we're going to find candlestick to be used for reversal in the lower time frame. And also we are going to cover retracement area levels. And then in the lower time frame for entry, this higher time frame would only be used for analysis. And then in the lower time frame, we are going to use liquidity sweep with proper analysis, including maybe fair value gap or imbalances. Confirmation candlestick must also sweep the liquidity. We have to understand that this is going to be some sort of a trading strategy, but it's not a full trading strategy. But it's going to help you at least to understand how to trade the market very easily and also to be able to enter the market without any hesitations. So let's begin with the first example over here. We have, let's say, a high around this area, and then we have a higher low, and then we have a higher high here. So in this area is where we will be looking to make some short positions, because price is likely, after making a new high, price is likely to reverse to the downside. And also sometimes the market can be complex. Let's say because price is likely, after making a new high, price is likely to reverse to the downside. And also sometimes the market can be complex. Let's say right now you see this lower high, you think maybe this is a break of market structure around this area, and then price shoot to the downside, and then start to reverse
Manipulation right here.
after breaking this lower low, and then price start to shoot to the upside. So in this case, that means we'll be looking to enter our market around these areas. And also I want to point out is that sometimes price can do something like this. It can also make this low here. We have this low, and then price break to the downside, breaking this. But here is where you should be looking for price action. Sometimes here you will find only bearish candlesticks around these areas here, and then you will find a bullish candlestick here. That's where you should analyze the bullish candlestick behavior around this area. Even around this area, you should also be looking for a bearish candlestick around this area to trade the market to the downside. Even let's see we have this low here, and then price breaks it around this area. That means you'll be looking for price action around this area here, and then look for a candlestick that manipulates the previous low. So that means in this area, you'll be looking for the market to do something like this, and then you'll be having only bearish candlesticks around this area. But once this bullish candlestick here appear, you have to make sure that it breaks the previous low before it can close bullish. So let's move on to a more practical example or more complex one. So in this area, we can literally see that we have HOP price action, but then suddenly the market decides to shoot to the downside. Maybe let's say this is your higher time frame demand zone around this area, and then price shoot below there your predicted demand zone.
Manipulation and distribution.
Your analysis was wrong, but your trigger areas was very wrong. You joined the market very early without even waiting. So that means in this area, you have to wait for the market to make those manipulations levels before you can enter the market. So you don't have to rush to enter the market, so you have to wait as always. And then in this case, we can see that we have a high, Most people will be looking to enter on this area, and then they will put their stop losses above this here. Let's say this is your high time frame supply zone here. Then most people will be looking to enter short around here. They will eventually, most of the time, they will do something like this. They will find a zone around this area, and then price is likely to shoot to the upside, and then hit the stop loss around this area. And then this is where you'll be looking to enter the market. You don't have to trade around this area here. You have to wait for this, because price is likely to do this. If you have noticed, most of the time, your trades are always in a stop loss. That's the motivation of this video. This video is going to help you to avoid those stop losses as always. So let's move on to more practical examples of candlestick patterns that we should look for in the market. Here we can see that we have a bearish candlestick. This one is an aggressive bearish candlestick, and then we have this bullish candlestick here. Here we can literally see that
On a lower time frame. This is like 4 hours. This is like 1 hour.
we have this low, and then we have this low, and then price
Manipulation. Distribution right after.
close with a bullish candlestick around this area. So that means from here, this low here, you'll wait for price to break this low around these areas here, and then you'll wait for price to close bullish. But sometimes you can still have a double confirmation. If you want to do double confirmation, then you have to watch the video to the end so that I can show you the examples of double confirmations. And we can literally see after this bullish candle here, we can see that the market made a bullish candle close, and then the market shoots to the upside. Let's say this is your daily time frame. That means in the lower time frame, you'll be looking to enter longs around this low here. This low will be used to enter longs, a long position to the upside. And also, if you enter on this area, when the market moves to the upside, you can still put your trade to break even, because price has already manipulated this low here. So price is likely not to come around this area here. This price point price is not really going to come until it breaks new highs here. So even if you enter here, let's say maybe you are in the weekly time frame, and then you enter maybe, let's say, on the 4 hours or maybe 1 hour. When the week ends, you'll be looking to close your position around here, because I know most people won't even try to hold a trade for 2 weeks. Okay, so let's move on to another example so that I can show you around these manipulation areas. Here on candlestick pattern 2, we can see that we have a bearish candlestick, and then a bullish candlestick. Here we can see that we have a low, and then we have a low here. But price, you can see we have a low around this area, we have a low here. But if we can look clearly at the price action, we can see that this low here and this low here, price broke this low with a bearish candlestick, but this next candlestick is bullish. And also we can see that there was no manipulation before we can see price shoot to the upside. So that means we had this move to the upside, and then we have this move to the upside. What we need here is this high here is this high here. Okay, and then we have this high. So this is the example, and then this is the estimated example that we need to see in the market. We have this high is the same high as this one here. Then on the next candle, before the market can be bearish, we need to see a spike to the upside before we can trade to the downside. Because we don't have that here, so that means this analysis will be invalidated. So then from here, right now, we have a bullish candlestick here, a low and then a low around this area. But we can literally see that this bullish candlestick did not trade below this low here. So that means also this one will be avoided. Even though price was shooting to the upside, did not trade below this low here. So bullish candlestick here, a low and then a low around this area. But we can literally see that this bullish candlestick did not trade below this low here. So that means also this one will be avoided, even though price was shooting to the upside. Okay, so let's move on to another example. And also after watching this video, you have to go and also find these candlestick patterns in your chart so that you can at least understand them properly. With better backtesting, this thing will be much easier for you to be freely. You will be much more advanced than someone who's not backtesting this thing. From here, you can see that we have a bullish candlestick, price traded above this bullish candlestick's high, and then close bearish. So that means we will be looking for the market to trade to the downside. From here, we have a high, and then we have a low, But price, from here, we can see that this high and this high. So that means we'll be looking to enter short. But the market decided to be bullish after closing bearish. This is what we call a double confirmation. We have the first high that trades above the first high here. Let's call it this number 2. But then price made some few highs in here, Then we have the last high here that breaks above this high here. So that means right now, let's say this one has failed. You'll be looking for the market to at least confirm with this one. So let's say maybe you don't want to use the first confirmation, then you'll be looking to enter on the second confirmation. Okay, this is what you should be doing. Okay, let's clear everything. From here, we can see this one has failed because we'll be looking for the market for, let's say, maybe for price action, not to trade above this high here. But price did something like this, and then it broke to the upside and then closed bearish here around this area. So that means this one is your double confirmation. But then we can also, let's say for now, we can see we have this, and then we have this bullish candlestick here. It traded below this low here, and then the next candle, and it also closed bullish here. So that means you'll be looking to enter longs around this area here, and then for price to shoot to the upside and then breaks this high. If you understand price action properly, you will always find this kind of setups. Sometimes it can be twice, sometimes it can be once before price action can shoot to the downside. So from here, let's look at this price action alone here, because we can already understand this one. So let's look at it. We can see from just looking at the two candlestick patterns here, we have this high of a bullish candlestick, and then we have this low. You can see we have this high. We have this high here. Price traded above. Let's say maybe we can just write this note here. Price traded above the previous bullish candlestick's high here, and then it closed bearish. So that means this candlestick can also be your confirmation. Okay, so we can see after price has made this candlestick, price just shoot to the downside, but then
it's to engulf basically. Like this is confirmation because we have an engulfing because we have this liquidity sweep right after, and yeah, because of that we have a real reason as to why we're going bearish. So
let's say we are on the daily time frame. We'll be looking to enter short in the 1 hour or maybe 30 minutes time frame. So that means you'll be looking to catch this candlestick in the 1 hour. Most of the time you'll find entries when price shoot to the upside before. That means in the lower time frame, this is your entry point, and then the market will just shoot to the downside. That's all that you should understand from this video. So let's move on to more examples. We have this bullish candlestick here. We have this bearish candlestick here, and then we have a bullish candlestick. But then this bullish candlestick did not trade below this low here. So that means we avoid this price action from here. We have this low here, but this bullish candlestick did not manipulate any low. So we can see that's why price shoot to the upside. But then this bullish candlestick price, we can see that right now we have a high here, and then price closed bearish after trading above the bullish candlestick's high, and then closed bearish. So that means price will eventually try to shoot to the downside because here we don't have any confirmation, but here we have a confirmation because price traded above this high, but price here did not trade above below this low here. Okay, that's why in the lower time frame you'll be price traded above this high, but price here did not trade above below this low here. Okay, that's why in the lower time frame you'll be looking to enter short around this area here. This is your short area here, and then from here I will be looking to enter.
things are in my head right now. We
Hello
just watch
traders,
this,
in this video I'm going to
then
show you where price is
go
most
sleep
likely
right
to
after.
reject or spike. Most of the time these spikes happen on CPI, FMOC, NFP, GDP, and PMI. Most of the time this happens during this event and so forth. So in this video I'm going to cover everything so that you can at least understand. So let's start with the video. Before we begin, let's answer some few questions that you might at least answer yourself. If you already know, you can listen. So does support and resistance still works in the market? Yes, it does, but the areas here around these tops here, they won't be as accurate as you see in this illustration. So another thing is that how to find the correct support and resistance levels using a line chart or a candlestick pattern. But in this video, we're going to cover the candlestick pattern so that we can predict the future rejection in price action. And also, the question that most people ask a lot is that why does the market don't retest the order block or supply and demand zone? Because most of the time you see price coming to your order block, but it reverses to 80. So this video is going to cover that way only. So let's move on with the things that we're going to cover in this video. This is what you're going to learn in this video. You're going to learn finding the levels that price action is having a higher chance of retesting or making a spike. Secondly, how can we use these levels to make a better trading decisions? Okay. Thirdly, using these levels to avoid being stopped out to 80. So this is also going to help you to put a proper stop loss. The fourth one is that making a smaller stop loss with a huge potential return, meaning that you're going to enter a trade using a smaller stop loss but having a huge take profit level. So that means some trades like 1:30, 1:50 around that area. And lastly, I'm going to give you a full trading strategy with just simple rules. So if you watch the video till the end, you will understand those rules properly. So after watching this video, you will have a better understanding of analyzing the market. Also, you will have a better understanding of placing a smaller stop loss and at a certain area. Thirdly, you'll be fearful of trading news or event. That thing will never scare you again. Like during NFT, you'll be more excited than ever before. And on the fourth one, after watching this video, you will have the patience to at least make proper entries by waiting for the market to give you that entry only. So if you watch this video alone, you will have a full trading strategy with all the rules. So and also I'll give you some few examples on how to use the high time frame analysis to to the lower time frame to make your entries. So let's begin with the first rule of this video so that you can understand the character that we're going to talk about. Here we can see that we have two bearish candlesticks. Here we have two bullish candlesticks. I believe if everyone can spot this kind of candlestick pattern in the market, even this one here, it's pretty much easy. You just look at two price action that look the same. Here we can see that we have a high, we have a high, we have a close, and then we have open. So you see this here, this candlestick pattern here. We are going to use the close and the open of both bearish candlesticks. You see this level here is very important. So meaning in the near future, you will see that price will likely to do something like this. Here, you will see that price is likely to do maybe something like this and then spike to this area here. Sometimes it does not even cross above this high here. And then you'll see that the market will just reject and then shoot to the downside. And also even on this side, you will see that the market will be bearish. And then suddenly you see a candlestick like this, touches here, and then price continue to the upside. But then it doesn't have to always be this easy. So if you spot this kind of thing in the higher time frame, that means in the lower time frame, maybe let's say price is around at this area here. You will roughly go to the lower time frame so that you can at least try to enter the market to the higher time frame. That means in the lower time frame is here, and then price continue to the upside. But then it doesn't have to always be this easy. So if you spot this kind of thing in the higher time frame, that means in the lower time frame, maybe let's say price is around at this area here. You will roughly go to the lower time frame so that you can at least try to enter the market kind of thing in the higher time frame. That means in the lower time frame, maybe let's say price is around at this area here. You will roughly go to the lower time frame so that you can at least try to enter the market to the downside. But you have to also do your analysis properly. Okay, you see this two candlestick here. They are the always be this easy. So if you spot this kind of thing in the higher time frame, that means in the lower time frame, maybe let's say price is around at this area here. You will roughly go to the lower time frame so that you can at least try to enter the market to the downside. But you have to also do your analysis properly. Okay, you see this two candlestick here. They are the ones that causing your price not to touch your fair value gaps most of the time. You will see them when we move forward with the video. So let's move on with the next example. For those who doesn't understand a fair value gap, is that we have three candlesticks here, and then we have this low, and then we have this. You will see it like this. Even in here, you can see that here. This is just I will do it. Let's move forward into practice. So from here, we can see that when price is very bullish like this, let's say we are bullish on the side, okay, then we have this bearish candlesticks here. When price is shooting to the downside, if price does not, this candlestick here, you see this candlestick, already one. If price does not trade above this open here, price is most likely to come and at least manipulate some highs when price is moving to the downside. Like you can see from here. Let me remove this one here so that we can understand. You can see we are moving to the downside. We're moving to the, but suddenly this candlestick here trades above this high, then the market will continue to the downside. And you can see that, let's say right now you have a fair value. Let's say maybe you have your supply zone around this area, supply zone here. You can see that you'll be waiting for your fair value gap to be traded, but then the market decided to say no, and then it reversed around trading on the open and close of this candlestick here. This is very important. But most of the time you'll see this when you have a fair value gap and then a supply zone around this area. Price is likely to on the open and close of this candlestick here. This is very important. But most of the time you'll see this when you have a fair value gap and then a supply zone around this area. Price is likely to come and trap here and then continue to the downside. Even on the side here, we can still see the same thing. Price did not trade here, did not trade around this area, but then we have this bearish candlestick, we have this bearish candlestick, and we have this bearish candlestick here. Then suddenly this candlestick appear and trade here on the open and the close, and then price continue to the downside. Okay, I hope candlestick here. Then suddenly price did not trade here, did not trade around this area, but then we have this bearish candlestick, we have this bearish candlestick, and we have this bearish candlestick here. Then suddenly this candlestick appear and trade here on the open and the close, and then price continue to the downside. Okay, I hope that is even more clear right now. So from here we can see that we have a bearish trend and then a bullish correction here. Let's write everything down. This move to the downside is impulsive. Okay, this one here is just a correction. But let's look at price action around this area here. Before price can shoot to the downside, we can see that there is no candlestick that traded above it. You can see it's only around this area here, but price is very far. So from here, if you look closely, we have a fair value gap, and then we have this open and close around this area. That is why you see price action here reacting, and then we can see a move to the downside. Even around this, you see this candlestick here, it traded around this area here, and then it started to shoot low. In the lower time frame around this areas where price
basically correction moves, because this is basically the displacement on the lower time frames, which means all this displacement needs to be, all this price displacement, huge displacement, imbalances in other words, need to be rebalanced. That's why we go here, we go over there, but the order flow doesn't change because this is nothing but a correction. So
is trying to manipulate this kind of areas here, you will see price action very clearly. So you can still build up your trading strategy based on this thing alone. I already have one, and I'm going to show you like only two examples so that you can at least understand them. So right now, let's move forward to the next example so that we can briefly understand this concept very clearly in the simplest way possible. So from here, we can see that price did not, after we can see that we have a bullish candlestick, we have a bearish candlestick, then the market started to shoot low. But this candlestick here, the bearish candlestick here, price did not trade on top of it first. But then, as you can see, price was shooting to the downside, and then it came up. It reacted only around this area here, and then
yo, this is a sweep. Oh wait, no.
it shoot low. That's all that you need to understand. And even on the side here,
But this is just a order block rebalance, isn't it?
yeah, we can see that we don't have a fair value gap around this area. Here we can see we have a fair value gap, but then price we can see that it reacted around this area here, and you can see that this is just spikes or just weeks. Even around this area here, we can see price was just rejecting. So that's all that you need to understand from this video so far. I hope you at least like understand this concept so that we can continue. Okay. So from here now, let's do one example before I can show you like how you can do like to build a trading strategy based on this simple thing here. You don't need to make your trading complicated. So from here, guys, we can see that we have a bearish. I can show you like how you can do like to
Basically a rejection zone over here. So he's basically saying this is rejecting this price range. But this, I'm a little confused because this is a demand level. I get that part. Sorry, supply level. I get that part, but you use tap and then you go lower. I don't get that part though, because I get that we're retesting a supply level, right? And then basically like see this fair value gap, so it basically taps and then it sweeps this liquidity, spikes from here, as he mentions, we have the manipulation right here, then the distribution right after. So we overall TP all the way up here. Simple, right? It's pretty fucking easy, but it's easy when you like look at it in hindsight, but when you actually like sort of identify the fucking charts, that's when everything sort of starts unfolding. So yeah, that's great.
strategy based on this.
I'm feeling sick in my stomach. I'm gonna keep it a bug. It feels fucking weird. Feels like I'm about to die. I don't know.
Simple thing here. You don't need to make it really complicated. So from here, guys, we can see that we have a bearish trend and then a bullish trend around this area.
Yeah, we see a price retest over here. Wherever the gap has been retested, it's a rejection zone right above, which is a supply level order block as well.
Yep. And then we can see that if let's say you draw your zone around here, let's say this is your
Just stop
supply zone,
repeating
you are
that
looking at the
shit.
market like this to come to this supply zone around this area, above this line here. But then why price did not come and trade here? It reacted around this area and then shoot to the downside. So that means if you're having that problem, you must be able to like at least try to fix it. So right now let me show you what really happened. You can see that we have a fair value gap here. You see that we have a fair value gap around this area, and then we have the supply zone here why the market reacted to our stop loss area. But then before this fair value gap around this area, we can see that we still have an open and close here. That is why the market reacted around this area. But then before this fair value gap around this area, we can see that we still have an open and close here. That is why the market reacted around this area. That's all that you need to at least like try to understand. Even if we try around this area, around here, we can see that we have a fair value gap here, let's say FVG. But then above here, we can see that price reacted here. So price does not always come to a fair value gap. That's all that I want to tell you. You can also see that even around this area here, I'm not sure if my line is very steady, but price also reacted here and then started to shoot lower before we can see this move that also reacted around that. Then above here, understand. Even if we try around this area, around here, we can see that we have a fair value gap here, let's say FVG. But then above here, we can see that price reacted here. So price does not always come to a fair value gap. That's all that I want to tell you. You can also see that even around this area here, I'm not sure if my line is very steady, but price also reacted here and then started to shoot lower before we can see this move that also reacted around that area. So even here in the lower time frame, you will always find some price action. That's all that you need to understand. So for now, let's move on with the example, maybe the trade setup that you can at least memorize or at least put it down somewhere else. Here, let's say we have a structure like this. We have a lower low, we have a lower high here, have a lower high, have this lows, we have this lows, and have this highs. Then suddenly the market shoot to the upside, making, let's say, maybe a high high maybe, but then price shoot to the downside again, making a liquidity sweep. So when price makes a new higher high here, when price returns to this candlestick pattern, make sure that at least you have a fair value gap below, and also make sure that you have your demand zone around this area. Then you will be looking to enter longs here and not here. Yes, sometimes it may still come here, but this pattern here, it won't be even visible enough if you know how to read candlestick properly. But that will be on the next video that I'm going to cover during next month. So let's move on with the example. Here we can see that we are on the 30 minutes time frame. We can see that we have this first candlestick here that made this bearish trend here. Then we suddenly see a correction around this area. So some people will try to sell around this area, but then price will just react here. And then we can also see this is a untested open and close. So we will just put this line here in the higher time frame. Let's say this is your higher time frame. This is the 30 minutes time frame. So then in the lower time frame around this area here, this is where you'll be looking to go short. If you don't know how to enter the market, I'll also show you in this video, but I'll put all the videos in the description below so that you can at least watch them before you can watch this one for entries if you want to build your own trading strategy based on this alone. But you must also have some rules for in case if the strategy fails, you just have to find some rules. So for now here, if we sell around this area, our stop loss maybe let's say will be above here, but then our entry will be here. Let's say even here because price action is around this area, then that means our stop loss is too big. But then let's say we are targeting that is like 1:1 here. So let's say maybe if you want more profit but with less risk. So right now because we're on the 30 minutes time frame, let's move on to at least the 15 minutes or 5 minutes so that we can see what is happening here during the price action. So from here in the lower time frame, you can look like to adjust this line here, but for now we can see that there is no adjustment. Price is just exactly where the end. So on the 30 minutes time frame, let's move on to at least the 15 minutes or 5 minutes so that we can see what is happening here during the price action. So from here in the lower time frame,
Guys, I feel fucking sick. I think I'm gonna end the stream. It's about 3:30. I think I gotta go to sleep because I feel sick to my stomach. And I literally feel sick to my stomach. And yeah, I'm just gonna end the stream here and go to sleep because I feel fucking sick. Okay, I feel sick as fuck. Gonna let the trades play out through AM Asia session and then probably towards like London session-ish. Anyways, guys, these are pretty good trades though, so I'm confident they would go in my TP. But I'm gonna go to sleep now, guys. Thank you guys, Kingpin, Night Trucks, even them. Appreciate all three of you guys tuning in. Love you guys.